Hi friends, this is Kishore. Welcome back to my channel. Today I'd like to cover market overview, jobs data report, bonds auction, economic calendar, crude oil price analysis, and OPEX fix seasonality. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. So the Syrian theoretic greed index, it is in the grade. We know last 2 weeks it's also in the grade. So as we know, like November, December is the bullish months, so we can expect a little bit greed or extreme greed in couple of weeks. And this is the daily heat map. Most of them are green, and this is the weekly heat map. Most of them are green, but energy sector was down a little bit, and also the household sector a little bit. And the ETFs, weekly heat map for the ETFs, gold was down, commodities down, energy is down, and also China ETFs are also down. So this is a sector performance. Energy is down like more than 3%, and also the materials because of little bit of bounce in the dollar. I think that's the reason metals is down. And consumer discretionary made a huge run this week, more than 1%, and also the technology. And this is jobs data. Jobs data came more than hot, more than expected. Like 180,000 is the expected one, but it came 199,000. So, but it did not impact the market because based on this data, there is a chance of rate hike in the coming FOMC meeting or in the delay in the rate cuts, but market ignored this data and market rallied. And this is unemployment rate also down from 3.9% to 3.7%. So this is not this is also not ignored by the market. And the TNX made a little jump on the Friday, but it's coming to the support levels of 4. Looks like it made we need some continuity on the Monday, so that we know it can go up. But right now, if you see here uh, the green line here is the CPI dates. So previous CPI release data report, it came down a little bit, and market rally like anything. So this week we have the CPI data release. If it comes, then we can go back. If the CPI comes good, better than the expected one, then it can goes down. It can break to this level or the this level. That's what I'm expecting. And this is a TLT. So TLT went up to 96 and made a little bit pull back to the 94 levels, and these are my support and resistance level. And then the CPI data comes better than the expected, then it may break this 97 level and go up, or it can come back to the 93 level, which is a gap level. And this is the auction, bond auction. We have a bond auction on 12/12, the 30-year bond, and also 3-year 10-year notes on 12/11. So if this bond action goes well, means the TLT can bounce easily and it can go back to the 97 levels. And this is CBOE option expiration week, expiration dates. So this week is an option expiry on Friday. So in general, in the option expiry week, like OPEX week, there is some volatility we can expect. Uh, let's see how the chart looks like in the index. And this is one of the seasonality on the option expiration day and the option expiry week and the week after the option expiration. So last 10 years, if you see, next week of the option expiration, it is very bullish. And in the option expiration week, there's from 1982 to the 2022, on an average it is up by 0.46%. But this was, it is mixed from last 10 years. If you see last 10 years, it is a little bit mixed, and from 2020 it was down. So compared to this week, next week is really bullish in the December after expiration week. And this is economic calendar. On Tuesday we get CPI data, on Wednesday we get PPI data, and also FOMC Fed interest rate decision. And this crude oil monthly chart, last week I mentioned this one. This is at 75. At the 75 there is a good support level. If it breaks, there is a Fibonacci level of 0.5%, which is the 71. And this week it came down to the 71 70 and bounced a little bit, and right now it is at just above that 0.5% of 71. So if it takes the support, it can bounce, or if it breaks this, then it can come back to the 57 level. And this is a daily chart of the crude oil. So this green lines are the CPI dates data reports. So last time when it came, from before CPI data to the last CPI data, the crude oil came down from 88 to the 78, and we see that CPI came cooler than the expected, and market rallied. And from last CPI to this CPI, from 78 it came down to the 70. So if I'm expecting CPI data comes cooler than the expected, and can market can rally. And this is the number of stocks about 20-day moving average in the S&P. Right now it is at 76. It hit in the last CPI data report, market bounced, and it was there for last couple of days. It's here, and right now it is at 76. But I'm expecting, if CPI data comes good, better than the expected, then it can jump back to the 86, or it can come back to the 60 levels. And the SPY daily chart, So it is at right now at 460 level. Last couple of days it is between 455 and 460 levels here. So looks like it is making ready for the expansion. It contracted last couple of days. It's either it can expand upside or it can go down. But I lean to the upside because based on the CPI data, I'm expecting it can go up. And this week the volatility like option range is $6. So 6 points. So it can go up 6 points. It can go down 6 points. So these are my support and resistance levels of the SPY. And this is QQQ. So QQQ made this week, it came down, hit this a gap and bounced it, take to the support and bounce it back to the 392 level. So if it breaks this 392 level, I'm expecting either 400 or 385 level, because this week is 7 point option expiry volatility. So it can go 7 points up or it can go to the 7 points down. If CPI comes better than the expected, cooler than the expected, then I'm expecting it can go up to the 400. And this is IWM. IWM in the weekly chart, it hit the Fibonacci level 0.38 to level 187, and then little bit pulled back to the 186 levels. And this is a CPI data report, green lines are CPI data report lines. Last time when CPI data came, it bounced huge, and from there it is rallied like anything. And right now we are here, and 5 points is the this week expected move. So it can go up 181 or it can come back to the 180 levels. So if CPI data comes good, better than the expected, it can rally to the 191. And if it breaks 191, and my next target's at 200 and 209, I explained this in my last week video. And that's all for today. So the summary is this week is an OPEX week, so that can bring some volatility to the market. And CPI data and PPI data is the key to the market to continue the seasonality rally, or it can pull back the market to the somewhat down, because last couple of weeks it is market is in a full bullish rally. And also small caps are in the focus, as I mentioned earlier. So IWM, if it breaks this time 190, it can go to the 200 or 2009. That's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel, and if you like it, please subscribe. Please share this content if any of your friends looking for similar kind of content. Please hit the bell icon so that you'll get notification when I upload a new video. Thanks so much. Bye bye.